Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, December 3rd, 2023. Hope you guys are having a fantastic weekend, and let's get started. So the party continues for the Bulls. I'm not really too sure what they were taking off of what Powell said when he said that, there's really no 100% certainty that they're not going to have to raise rates again. And I know bond markets, the yields are coming down, so that's obviously bullish for the market. But the thing is that what people are reading between the lines with what Powell said was that, right now they're on pause because they believe that their rate hikes that they did are going to affect the economy. So this is kind of what I've been saying, where it's kind of a double-edged sword for the bulls here, where a lot of people are trading that they're done raising rates and that we're going to see rates start to come down. But the only way they're going to come down is when the economy really, really slows down, meaning that we're either going to be heading into a recession or some type of soft landing. But it doesn't mean the economy's good. When the economy is not good, earnings are going to start coming down. So you're going to have the valuation end of it. I don't know when this kicks in, but it's a kind of a remarkable run with really 2 days of a break and no at least 1% drop. And like I said, it's not sustainable, but right now, the bulls seem to be doing it. We have these bearish divergences that are on the daily charts. On the 60-minute charts, you can see we have these extended bearish divergences, but this is really the area that the bears need to get through. They need to break through the 50-day moving average on the 60-minute chart. If they do, that's when we should see the collapse down to the 44.50 area. But right now, the bulls, you can see each time they go and they're buying it, and that's it. So this is obviously the line that the bears need to get through. We do have, the resistance from these highs right here at the 46.10 area. So we're right in areas where it's very there's heavy resistance. And if we go back and look here, we kind of had the same thing going on where we had these extended bearish divergences that play. But at least here we had a couple drops along the way. This has literally been just straight up. So we have these divergences. When are they going to kick in tomorrow? Maybe. We'll see. It's kind of hard guessing when, but I would not be chasing this rally right now. I know that seasonality, it's on the side of the bulls, but they've probably eaten up 90% of the seasonality trade already. So we have the divergences. Obviously, this is what the bears need to get through, the 45.37. If they do that, there's support right here at the 45.24. But again, if this is where if they take it out, we're going to start seeing pretty big gaps to the downside on it, where we'll start going at the 44.82 and more likely closing this gap. And the reason why I like this gap getting closed, it's a 38% retracement. So we've gone up almost, I think 11%, something to that extent in there, without any real breather whatsoever. And if we just see a 38% retracement, just say because of seasonality, it will take us down to the 44.18. That will set up the Santa rally. Right now, I don't know what's going to be the cause to shake up the bulls party right now, but this is really the way that it's been with every rally. Everybody jumps in. Nobody believes that anything will happen to take the market down. I start getting emails from certain people that pretty much, has marked the top every single time they sent me an email on where the market's going. But in any case, the bears need to step in. I know, from what I'm reading, I know a lot of hedge funds got forced to cover on Friday, from what I read. And it's one of the things that once the bears are out, I don't, just as far as valuation wise and where we're going with the, where the PEs are going to be based off of earnings. The market's way ahead of itself once again, and that's it's going to be paid. They're going to have to pay the piper. It's just a matter of when this party ends. That you don't know. The power bill is basically out. It's just they haven't turned the lights out yet. So we have to be a little bit patient on this. That this market has gone way higher than I thought it was. We're getting long down here, but we took the profits right when we got into our 100-point gain. And from there, that's where I thought we were going to come down and have a breather just to digest this move. But you can see it was just an intraday move, and then they just shot it higher again. So, like I said, I don't know what the catalyst is going to be. Something is going to have to come and shake this market up. I think the bulls are going to have some issues getting through this 46.10 area. And you can see here, this 45.40 is important for the bears to get through, and if they do, that's when we should see a move down to the 44.80, and then that's where decision time will be made. I still like a move coming down to the 38% retracement at the 44.18. You can see we have bearish divergences already on the 15-minute chart. So let's see what plays out tomorrow. Like I said, once the bears can break these moving average bulls right now, that's when we'll start seeing a little bit more of a move to the downside. But until they do that, the bulls are going to continue to just stuff their faces in the all-you-can-eat diner until either they can't eat anymore or they get sick. So with that, have a great rest of your weekend, and I'll talk to you guys in the morning.